Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov, looking like he just got off the diamond. Must have played a little baseball this morning there, young son.
I've been playing baseball like every day with my kid. It's been great.
It's the greatest. I actually have three sons, and they're not young anymore, and they never really loved baseball. I played baseball when I was a kid, but basketball was the sport of choice in our house. But I miss those days for sure. But on to markets. A lot to talk about. Again, I'm probably going to go till about 9:10 today. Again, so we got a lot to cover in 40 minutes. So let's get right at it. And I'll start with market action yesterday, which was very, very interesting, especially coming from the day before, where the market on Monday had everybody short coming in. Market looked weak on a Friday close of the worst close since April, and the market rallied and had a two sigma move and rallied back to be unchanged day over day. And yesterday, the market was up overnight significantly and then sold off and kind of chopped around. A good trading day for traders out there. Stuff was really moving around, and I liked it. And we did pretty well on our short term trades. We did two trades for LSB, and they made money. And looking at a lot of different things, little disappointment with the currency move. Yen position is up slightly, euro position is down slightly, but both of those positions were doing pretty well with a little bit of dollar strength, but that's sort of out the window right now. So there's no more dollar strength. It's almost dollar weakness. Bonds had a very big move up to 418, lower yield and higher bond prices down to 418 on the yield. Back today, this morning when I woke up, I was kind of looking at it for a trade, and I like this trade, which I'll talk about in a minute. It's a little bit risky, but I think this slight pullback inside of this bond move should be bought. So I'm looking to buy TLT. You could either buy the outright stock, sell a put spread. We don't sell naked options here. So we would do a put spread, and I could show you guys how to set that up where you have defined risk. We always want to trade with defined risk here. So I like that trade a little bit. I would have liked to buy 4.25 on the yield. It's 422, but I still think there's an up move coming in bond prices and lower yields. I don't know if you agree with that, but
Well, it sounds like you're in the they're going to cut rates in September camp.
I mean, I don't. I'm definitely in that camp, but I don't think that really has as much to do. That will affect the short end a lot more. I think there's an underlying theme here that's not really been played out yet, and that is the fact that things are much slower than people think. And now it's kind of like threading the needle for the Fed because, yes, things are slowing. And we got to hope that there's no inflation and the numbers, come next week and they're going to be pretty big, as far as importance to the market. So that is going to really help us, determine. But I'd like to sort of get out in front of it, and I may be a little bit aggressive um, on it, but I think a move down to potentially 4 is in play here. A lot of earnings yesterday. Palantir, the most overowned retail meme stock on the board, will not tick down. They had good earnings, but the move's been enormous, and they were celebrating that they did $1 billion in just gross revenue. And what's interesting about that is I was looking at AMD last night. I know they're in different businesses, but AMD did about 7 billion. Okay. And the stock is getting hammered because they they didn't miss the number, but their, I guess, guidance forward wasn't so great. So, it's like this Palantir is like a meme stock, but people don't realize the meme stocks that people are trading out there, the retail, they're not like $500 billion companies. They're, 10 billion, 8 billion, GameStop, AMC, all these names, quantum computing. So, this is, I've been trading a long time and I see what's going on. I respect it, but we're looking, to put on a short in this name that we could stay in for a while. And, that may come at a little bit higher level, but I like that name on the short side. I know it goes against everyone probably in the United States, but I like to be that way. There may be a little bit more upside. Like this morning, stock was down $1.50. It's now basically up. Um, so same stuff. Retail buying, retail bought all night. Same type of thing. Um, so it's going to take a little bit of a down move to break it, and then when I've seen this before, when it breaks, it goes down quickly, sort of what you've seen in Coinbase. I don't know if you've been following Coinbase at all, but Coinbase got up to $450 a share 2 weeks ago. It's under $300. I mean, a massacre. But it was the same thing. It was an insatiable buying appetite, not really regarding anything that was truly real out there. And then that stock broke. So we're expecting that. There was earnings, a lot of earnings. Uber had earnings. Earnings were much better. Stock is slightly lower. It may have turned. I haven't looked at it in a little while, but it was down a little bit. It's also had a very big move. And I think, actually it's back to almost unchanged. And, a lot of these earnings last night were not great, and they're kind of shrugging them off. AMD is still down double digits, and that is putting a lid on, I guess, Nvidia. I don't know why, but wouldn't it mean, it's funny when they sell off these stocks in sympathy, it kind of doesn't make sense. Maybe AMD's numbers aren't so great because Nvidia is getting all the business. I'm not really sure. So, we'll keep a close eye on that. Nvidia down a dollar. S&Ps have been both sides of unchanged multiple times today. Um, I'm thinking, I haven't agreed with you all week, but I'm thinking maybe today, since the market is very, very tired, the market's tired. People are getting destroyed this week, okay? Monday hurt people. Yesterday really hurt people, okay? I mean, think about yesterday. It was all bulled up, and then all of a sudden we broke 70 handles. And stocks like Microsoft, which were up $4 on the opening, reversed over $10. Having 3 to 5% moves. So I think the market is a little bit tired. You got to pick a direction if you're going to do an iron condor, or one side of the iron condor, which is selling just an upside call spread or a downside put spread. Um, but I think that may work. Yesterday we sold both sides. We sold the call first, and we were getting hurt, and then we sold the put first, then we were getting hurt, and then we sold the call, and we ended up threading the needle and had a really nice day. But it's a little scary. But again, I think today is a little bit different, in the sense. Obviously, we're going to move off the 10-year auction. I don't know why that would move us so much, but I think
What time? What time does that come out?
it's like one, a little after one in that area. Um, that should be.
You had me all scared yesterday about the bond auction. I've never heard you say bond auction, and then you said it, and then I'm like, okay, I gotta pay attention to it, and nothing
Yeah, the
happened.
bond auction is always important. It's like the refundings. Um, it is important. Um,
But I've seen the market move sometimes on that. Like when the market is really thinking about interest rates, they'll pay attention to it.
hmm. It's always a market mover, and it could be a market mover today. It's always a market mover. We have the 30-year tomorrow behind it, so there's a lot of supply coming into the market. I'm just thinking, you know, like
It's coming out. The year is coming out at one,
the market
and then
today was very strange. Like when I woke up, Nasdaq was lower, S&P was higher. Then all of a sudden, Nasdaq shot up, S&P went down. Okay, there was a point this morning where S&P was up 20 and the Nasdaq was up like 15. So that spread is now coming back in line and it's flat. Okay, it looked like the S&P was going to outperform. Dow is outperforming, but it's funny. In my 40-year trading career, I've never ever been in a situation where, we're looking at, is the Dow up? If the Dow's up, it means the Nasdaq's not going to go up. Or, I mean, it's crazy. It just feels like the whole day is programmed by an algorithmic computer that basically has it all rigged up. And it was funny. I love using the word rigged because I do believe a lot of the numbers are rigged, and the market in general has a little bit of rigging to it. But Trump yesterday was going ballistic that all numbers are rigged. So we're definitely in the same camp with that. He's like, those numbers are rigged. They're all fake. Everything's rigged. So
you guys are more similar than you think.
oh boy. And I don't know. I mean, it's kind of quiet all around. Oil bounced off the $65 level. I guess it likes that level. Still don't see a trade there. Uh, Gold
Yeah,
again.
oil is interesting because the chart looks horrendous. Maybe I could pull that up, but the chart looks horrendous. But I think the structure and the forward curve seems to be like supportive of price. Let me pull that up. We talked about it yesterday. I have a small position on. Um, I'm just looking for a trigger to add. Now, today's Wednesday, so we'll have an inventory report as we always do on Wednesdays. Here's oil. Top panel, bottom panel, you have a couple of calendar spreads. And the reason I follow calendar spreads, I think it's a real time representation of supply demand. And typically, what happens is CTAs, hedge funds, are going to play around in the short end of the curve, which is your spot prices. That's your headline oil. And they'll take things a little too far. And then you can sometimes spot divergences in those calendar spreads. I just don't see calendar spreads telling us such a bearish story right now. So I don't know. I'm thinking 64 should hold. But look how horrendous this chart looks. It's a really ugly chart. So I could see why people want to short it, but I don't know. I'm kind of thinking it doesn't go down here.
I don't know. I'm not really focused on it. If you've been tuning in, we caught that original move when we broke above 70. We went to like 85. We got lucky because obviously we had the Israeli Iran conflict, put in with us. That conflict. It's funny when you think about it. It lasted one day. I've never seen anything like it. It hasn't been talked about. They haven't checked the nuclear facilities to see if they actually are there. It's almost like it was done as like a ploy, just to, sort of send a message. But I don't know. Like there was no follow up. I mean, and I think it's what the world's become. It's almost like we're the big bad wolf, but we don't do anything. We just flex our muscle, lift a little weight, and then we sort of go away. Um, and I just wanted to mention before we get a little bit more into markets that I have a strategy that I'm going to explain tomorrow at 2 p.m. It's meant to take advantage of big market divergences that I've come up with, where we're seeing what the market is doing, which we always talk about on the podcast, and what the data is showing. And I would love people to tune into it to check it out. You could find the link and sign up. And watch the video, and I think it's very insightful, and I think you guys will like it. It's a lot of what we talk about here, and it kind of gives you a strict way to take advantage of these divergences that we're seeing, which, we talked about it a little bit here a minute ago, just how, the Dow is up, Nasdaq is down. Why is that happening? Why are stocks going up with bad earnings and some stocks going down with good earnings? Stuff like that. So, it would be interesting, I think, for everyone that's watching me here to, if they haven't seen any of my webinars, to look for the link and check it out. But back to S&P, it's feeling
Well,
like
I would just add to that, and I think everyone should watch it. I'm gonna watch it. I'm
uh,
just curious. I'm just curious what you're gonna say. Uh,
you're gonna get a good look at it. But
I want to hear what you're gonna say about divergences, man.
oh boy, that's my main thing. It's
It
funny
is.
between mean revergence, mean uh divergence, and the market divergence. That literally is what I do, like, on a daily basis. Along with taking, what's really made what I'm doing, I think, really, really special right now is, and it's a crazy thing. So I got into the option game when I was 21 years old. Um, and I won't tell you how many years, but if you add it up, I'm 62. So I have 40 plus years of experience in options. And what I'm seeing now, like the volumes and the amount of speculation and the amount of craziness and the zero DTEs has just given the opportunistic trader and our subscribers such an advantage, because we understand how to price options, we understand how they move. And most people out there are in this game with not any education, no mentor to guide them, and no idea really what they're doing. And you know what? You can win; it is possible, but over time, it's very, very difficult. It's funny. People always say, "Hey, I want to learn options," and that takes a very long time to do. I don't know how many options you did before you joined me, or if you were
Zero,
even in it.
zero.
Yeah,
Strictly futures.
right.
So
So the bottom line is, now the beauty of it is you can still be futures, but you can use options to hedge your risk, understand how to do that, enhance your return, and come up with ways to, I call it like creating the ice cream sundae. I have the ability to basically sell something or buy something and create a long or short by doing that. In equities alone, the only way you're going to ever be long equities or stocks is to be buying the stock. I don't have to ever buy a stock, okay? I don't ever have to put up $750 a share to buy Meta, or $200 or $165 to buy Nvidia. I don't have to put up any of that. I could put on a position, okay, with less than $10,000 that gives you, you know, millions of dollars of stock position. Okay. So that's the beauty of options. It's a fallacy when they're out there telling you, options are this. Options are the best thing that has ever happened to the market. And you're seeing it come through now, because the volumes are dwarfing equity volumes, dwarfing them. Because you got to remember, one option is 100 shares of stock. So you control with one option, whether you're long a put, you control shorting 100 shares of stock, you're long a call, you control being long 100 shares of stock. And you're not getting that, okay, with an account of $25,000 trading these names. So options are the best thing out there. they're being misused by the public in a big way, which is giving us an unbelievable, unfair advantage to take advantage of what's going on in the market right now.
Don't tell them. Don't tell them.
Well, no, they're not gonna. It's not gonna stop. It's only gonna get bigger because what's happening, Eric, is they're getting. It's the GameStop AMC effect in a way. They're getting big wins. So, like, let's say Nvidia ran $15 one week. You buy a call at $1 and it goes to 7. Okay, you've made 7 times your money. You're never getting that trade on Nvidia in your lifetime. I mean, unless you were really early entry into it. So the beauty of options is you can exponentially make returns. You can make them very quickly inside of a day. Okay, which we utilize in a number of our different products, and that's what's going on here. And retail is in the market in a big way, and they are trading equities. But really, where it's changed right now is options. We did 10 million options in the S&P on Friday. That number's in my head. It's crazy. They did 6 million Nvidia options. You got to put a zero on that, 2 zeros. Okay, so that's like 600 million shares. I mean, it's an insane number. So options are really prevalent. The speculation is very, very high, but it's giving us opportunity to come into the markets and make money day over day. And what we try to do with the show, and I hope we're able to, is show you guys sort of the setup for the day, what we're looking at, different equities that we may trade. But really, for me, I'm more at the core macro. So I'm looking at the markets that we talk about every day. We're talking about gold, we're talking about oil. We talked about oil today, gold, mid, off the low, way lower than the high. Again, you don't agree with me. I think we had a blow up top at 36.50. We're down about a little more than 10% from there. I don't think we get there again for a long time, potentially, but I could be wrong. But it seemed like a top that's, I'm not saying generational, but a top for now. I don't see a trade there. I think every time it comes in, you could buy it, but it has to come in below 33. It's right now 33.66. So mid range today, down slightly. Uh, Dollar is an aggravating trade, again, very weak today. But it's flip flopping. And really, if you look at the dollar, it's having a god awful year, which is very, very strange. And then you would think, like, the DAX is having an amazing year. It's up 20%, right? On the year, the German DAX. Okay. We're up like 7. All right. It's doubling us minimally, but it's also with currencies. If you put the currency in, throw another 15% on top. I mean, that index is skying. Usually those indexes are going down when you have euro strength. That hasn't been the case. So, returns out of Europe have been stellar, and add the dollar on top, it's been really, really good. And this morning seems very quiet to me. It's a little bit different feel than we had yesterday and Monday for sure. Monday market opened up, people were short, and they rip people hard. I had a cover. We had our one of our worst days in a while on Monday. We've recovered from that, but Tuesday they could have blown people out of the building if they kept rallying, and the market came in and basically was a bit soft. And then today we've been both sides, but if you look at the S&P future, we haven't moved 10 handles since 6 in the morning or more, or even more.
The other beauty about options that I think you missed is exactly what you're saying right now, where the market isn't doing anything, and options give you that extra dimension of making money, where you don't have to just bet that market is going up. You don't have to bet that the market is going down. You can also bet that the market isn't going to do much. and that's
I, I
that.
I hate using the word bet in the market. I never use that word, even though I call it controlled risk taking. Um, or even out of control risk taking. I do not like the word bet. I don't associate betting to anything that I'm doing. Okay. Betting is, there's a tennis match at 2 o'clock and it's, Shelton against, whoever, and you're betting on one guy. This is not, to me, this is not betting. I'm taking, I'm taking educational, you know, risk
Yes, control risk
very
and education.
and the difference, it's very interesting. So I have a lot of different things that I do, but one business that I was in a few years ago, I was able to, people out there may know about this, but I was able to buy employee stock from employees of companies that didn't go public yet. The first one we did was Facebook. Um, we've done a number of different deals over the years, Twitter, Airbnb. I could name 20 of them, but that business was not me. I didn't control that. Okay. I basically made an investment in a company that's not controlled by me. The beauty of what I'm doing here, okay, is I control everything. Okay. Obviously, no one controls the market, but I control how much risk I want to take, what I want to do, how aggressive I am. And when you use the word betting, listen, I'm not saying, you're not making some type of wager, okay, but I don't find this to be betting. Just I I
So
I
what is trading like? Is trading people? A lot of people say trading is like poker, right? And you have a lot of hedge funds that you go on an interview and you're going to play some sort of card game or poker. We've heard all the stories. To
I mean
me,
that's a little
trading
different.
is much more like blackjack, the way that we do it, than poker.
I don't agree. I think it's a lot like playing poker, but
Well,
it's
that's
not.
because you trade. You have an uncanny ability that a lot of people don't have to trade on gut feel. So for you, it's like poker.
I
But
mean,
for like,
listen, that's changed over time. The feel of the market. You call it gut feel. I don't call it gut feel. Okay, I was putting a puzzle together, so I would say, and I never really go out with this, but I was an algorithm before they ever invented an algorithm, and now what's happened? So my algorithm was I would look at Europe. I would look at the strength in the US versus Europe, and I would be like, wow, US is really weak. Europe should come in, and everything would, come back into line, all the puzzle pieces. Hey, bonds are up today, the market's down. 75% of the time when the bonds are up and the market is down, the market rallies. So we'll play those odds. And we were setting all of that stuff up. What's happened is you've got young kids in the market that don't care. They're almost, what they are, and it's true, they're false clues. So they throw you that tidbit, they throw it out, like a like basically a fishing pole with a line of bait. They throw it out and you're like, I've seen this pattern 10 times and it works every time, and it won't work. So they throw you the head fakes. That wasn't in the market years ago. The market was much more pure. Now it's like, I mean, you're a product of it. Okay. You're the S&P Nasdaq trader. I see no correlation. One day that could be up, one day it could be down. One day they're buying one, not buying the other. But that's what people are looking for. And it's funny, you said you had a good day yesterday and you only traded the Nasdaq short. You expressed the position with just one part of the position. It's too hard to express that
sometimes
position.
I listen to. Sometimes,
Oh boy. I appreciate that. And I'm not even saying you should listen to me. I
sometimes,
just think
Larry.
it
I
I
said
think it's
sometimes.
hard. I think it's hard to really look at the markets. Like for me, I just want to be right on one. When I look at I look at equities. I look at the Dow, which we rarely ever trade, if at all. So it's really S&P and Nasdaq, and we do some Russell, but not a lot. Okay, so it's really S&P and Nasdaq. And to me, if I'm looking to get short the market, which I'm not today, I'm kind of thinking, and I think it could be a sell call and sell put Condor type of day. I just have to look at the pricing on that. I have not looked at the pricing on that, but I will do that after the opening. But I just don't see an outsized kind of move today because they've shucked the trees 2 days in a row. People have lost. Okay, so it's like if you've been bullish, guess what? You haven't really been winning. And if you've been bearish, you haven't been winning. So nobody's winning. So they don't have what we would call, and I'll get into this a little bit, but something that's a poker term, a chip stack. You don't have the chip stack. You don't have the money. Like what made my hedge fund really, really good and sort of the way I trade always is I build the chip stack. So like when we had the hedge fund, we were running $1 billion. If I was up 10, $20 million for the month, I was almost unstoppable because I could take a lot of risk and I would risk 25% of what I'm up on a certain trade. But when I'm not up, I can't take those risks. I'm not losing 25% of anything because I don't have it. So I think a lot of the reason why the market probably will be tamed today is nobody has the P&L. Nobody has, then they're not up a lot of money. So, you
I
know,
saw an interesting. I saw an interesting tweet uh, about an ex Steve Cohen employee who basically echoes what you're saying. I'm going to read it out, and this is from River Road Partners. So shout out. I never met River Road Partners, but I think it's an interesting quote. He's like, "Best advice I got from Steve Cohen: always stay on offense. To do that, you need positive P&L, a ruthless ability to cut losing positions quickly. If you don't, you play defense. Defense ends up taking all of your time and you miss opportunities because you aren't looking. Stay on offense." I thought that was a great tweet.
I love it. I
I
mean, that's exactly what I'm talking
exactly what you're
about.
saying.
I think
Exactly.
it's the most important thing. Listen, it's like anything else. Like, you're saying like, trading is more poker or, more,
Again, I
what do you
disagree.
say?
I don't think for me it's not like poker. For me, it's more like
Well,
blackjack.
you're looking at the game of poker. I'm looking at the money management aspect is exactly like poker. You're up money, you're pushing all in. You're owning your opponent, okay? It's the same thing in the market. If you have a chip stack or you're up money, like this guy is saying, you stay on offense. You're aggressive. When I'm not up money, one of my signature statements is, and I use this all the time, and it's really a moniker for the opportunistic trader, and it's called put a P on the page. And all that was when I made it up was put a profitable day on it. Didn't matter if it was $1. Okay, all we wanted to do was have a profit to turn the tide. Okay, these are all trading things that are extremely important. And I'm not looking at poker like I'm holding, 5 cards or 7 cards, okay? And then, I'm looking at poker analogy as a money management, risk management, to trading idea. So
Yeah,
that's,
the chip stack. I got it right away. That's where the heart of
well,
the
how are
analysis
you?
is.
Let me ask you. So, it's very funny. So back when I was in Spear Leads, we used to get IPO Syndicate stock, okay? Back in one of the last bubbles in 1999, okay? And we were a broker dealer, so we did a nice thing. We got the IPOs and then we gave all the money to charity, okay? But the reason why I bring it up is every morning there were IPOs coming every day. It was like a bubble beyond. And we were up 8, 10 million every morning on the opening. How am I going to have a negative P&L if I'm up 8 or 10 million? I'm not. I'm risking 5 of that. And then I could take the 5 of that and turn that day into 15, 20. So really, it's funny, we're getting deep into it, and I have a hard stop again at 9, 10. So I'm going to go for another couple of minutes, but I really think this is interesting, and more important than the markets is just the money management aspect, how to build your P&L, how to take risk that makes sense, and how to understand when you're not seeing the ball, like to sit back. And that's the hardest thing for people and my subscribers probably out there to be able to do. And what I've seen, I've managed hundreds of traders. I don't know if the number's at over 1,000, but I've managed hundreds of traders, and the biggest thing that I've seen is just a lack of discipline in traders going on tilt. I call it tilt. Like literally,
Yeah.
I've gone over to traders and they're like, please let me stay in the. I mean, I got stories that would take many podcasts to go through. Just the mental psyche of what makes up a really good trader. But I really like that quote. You want to stay on offense when you're doing well. When you're doing badly, all you want to do is put a positive day together. One day. It doesn't matter if it's $1. So it's put the P on the page. Most important thing in
Get out
trading.
of losing positions quickly. Quickly.
Well, I don't know. I mean, listen, I don't want to throw you under the bus in the last
I
six,
made, listen,
there's only 4 minutes to go here, so I've been very kind, but I mean, you basically broke the discipline. You said you had to stop, and then you're like, "Oh no, I don't have to stop. I
oh,
got back in."
yesterday, no, I stopped out, I reassessed, and I'm like, that was bullshit, and I got back in. The getting back in for
But why have
me
to stop?
was the second trade. It had nothing to do with the first trade. And also,
It only came a second
I
later.
was, I was playing with big P&L. I was already playing with big P&L, as you said. I'm only going to risk like at that point, I was only risking
I
small
just think
percent.
one of the biggest things I see from traders, especially, and potentially subscribers, is people not owning up to losses. Listen, the hardest thing, and I'm going to leave it with
Oh,
this.
I only win, dude. You didn't know that?
No,
I
but
don't lose.
listen. The hardest thing, okay, is to accept. There's two things. One is the hardest thing, which is accepting a loss, okay, and realizing that you have to grind back. And what I've seen hurt traders or people in the businesses, the losses are too big and they can't make it back, okay. And then the second thing that I see,
They're unwilling to reclimb that mountain. I
no, they
think also.
can't because the loss is too big. I've seen it many, many times,
But the
okay.
reason they let that loss, I think, go that far is because they know, oh man, I just have a drawdown. Now I have to climb that mountain again. And that's a big mental challenge that a lot of people can't overcome.
But they can't
So
climb
that's
the
why they
mountain.
let those losses go and go.
No, the mountain is too big. Okay. And then the second thing that I hope that I helped you with, but you came to me when we met with this, is basically after you get out of a trade, looking at the trade over and over and over again. When I do a trade, I never look back. If I look back at trades, I would want to, not say kill myself, but I'd want to be very, very angry. Okay. I bought 20 million shares of Bank America at $2. Okay. I made a trade on it. Okay.
So you don't dwell. You're saying you don't dwell.
No, it's the worst thing you could ever do. I mean, I got trades where I could have made 20x, but I made a lot of money and I'm happy, and I may have traded the stock both ways. So I think it's important, okay, to not take big drawdowns because it's hard to come out of the hole, and then never look back and beat yourself up or keep looking at a stock. Like I had to hear about Netflix for like 7 months. It was brutal. I mean, brutal. Yeah,
By the way, Netflix can't go up anymore for
no,
some
I
reason.
think they probably have a lot of competition. But anyway,
That's what I've been saying for
I'm gonna
years.
have to wrap here.
Before
So
you go, we have a quick audience question. Let's just
I'll let
I
you
think it's
answer it.
a real quick one. Larry, do you think AI will have a dramatic increase in earnings in the next 12 to 18 months?
No,
Hey,
I'm
what do
not.
you think about AI?
I think it's overvalued in a massive way, and I think that's the biggest part of this bubble that I believe we're in. Bubble being caused by massive retail buying of names and putting market caps and valuations on names. So I don't really want to go back and forth because I have to wrap. But I think it's overvalued. I've seen this movie before. This is the beginning innings, so it could hold for a little while, but at some point it's going to bust. Um, I'm waiting for my robot in my house. I'm using AI for certain things, but it's not really taking.
But it's not just the robot, man. It's companies just becoming more efficient in what they owe in their
Why do they
day to
have to
day.
call? Why do they have to call that AI? I mean, I don't know
Because it is
why
AI.
is it
They're
AI.
using AI.
I mean, I don't understand because they could Google things faster and they could get they could create a Larry AI avatar which is out there somewhere on the internet. I don't know how that's bringing in massive revenue, but listen, I we could discuss this. Um,
Just on the revenue side, it's
no, I just
also
don't see it yet. But anyway, I think the market today is going to be contained inside of a range. Um, we're going to look at both sides and watch the bond auction at 1. And we'll be back to everybody tomorrow with a lot more information. I hope you guys got a lot from this podcast today. And I appreciate everyone for watching. And we'll be back tomorrow. Everyone enjoy.